What's going on this Monday?
Hey, Scott, thanks a bunch. Welcome, everybody. Hello, Steve on the West
Hey,
Coast.
what's up,
What's
Jamie?
going on?
Happy Monday.
Yes, happy Monday to you. Happy Monday to everybody. Thanks for attending. Today's April 25th, office hours edition. So without further ado, let's just jump into the disclaimer really quick here before we get going. Just want to make sure everyone in attendance is aware of the fact that all of the information that we share with you in this webinar or any of the other webinars we have coming at you on a weekly basis is for educational purposes only. Simply meaning, please don't take what we share as a solicitation to buy or sell stocks or anything else for that matter. If you do need that type of advice, do yourself a favor, seek out someone like a registered investment advisor or a Series 7 licensed stockbroker. That way they're all legally allowed to dispense buy and sell investment recommendations to you, so forth and so on. So once again, everything we share with you guys is for educational purposes only. All right, moving right along here. Always like to take just a little bit of time here at the top of the hour to let everybody know about the community that we've built around the software that is Trade Ideas. Of course, everybody is probably already familiar with the trading room. If you're not familiar with it, you need to be because it is a great place to learn and trade. Even if you're a beginner, intermediate, or an advanced trader, you will find value there. Barry opens the room 30 minutes before the open every morning and does a fantastic job at moderating quite the large crowd that's in there on a daily basis. Also, too, other than Barry, the next best thing about the room is that it is free. If you've shopped around for trading rooms out there, you've probably realized that most of them are not free and charge quite a pretty penny to get in there. But we make one available to you free of charge with a great environment. Of course, today is Monday. You get myself and Steve for office hours. We alternate Mondays. We used to do them every Monday. Now it's alternating. Same with Trade of the Week, which is every other Tuesday, where Steve takes the wheel and Andy Linloff's going to ride shotgun with him. Come around to Hump Day, every other Wednesday now is the Q&A demo with our CEO and founder, Dan Merkin, along with Brad Williams. And Andy's going to round out the every other Thursdays with the Trading Studio, and I ride shotgun with him. Of course, we still have our daily support webinar every weekday, Monday through Friday, starting at 12 p.m. and going till 1 p.m. Eastern every Monday through Friday. It's a great place to come and get any type of question answered regarding trade ideas. We have a live person in there every day. It's always a different one of us trainer slash individuals here at Trade Ideas. So the next slide here will show you how to get there. Trade-ideas.com/live down here at the bottom. That is a static address. So once you get that queued up, you can just bookmark it for easy access. Trade-ideas.com/live. That's hosted on our YouTube channel every Monday through Friday, 12 p.m. to 1 p.m. Eastern. Trade Ideas University, okay? Especially if you're new to the product, these are hosted on our YouTube channel as well. Beginner 101 all the way through Advanced 401. If you are new to TI and you haven't watched these two videos, at least 101 and 201, do yourself a favor, go over there to the YouTube channel, find them, give them a watch. It's really going to help you advance that learning curve, get over that learning curve a lot quicker than not watching these. Also, too, we have the more advanced 301 and 401, gets into back testing and some of the more advanced features of Trade Ideas. All right, here we are at today's agenda. Quite an interesting market session, interesting action from the market, and then also interesting developments today. I'm sure everybody is aware of the fact out there that it appears that Elon Musk was successful with his takeover bid of Twitter. So that's all the buzz right now. Halted that stock during the trading session while that was announced. So interesting times going on out there along with all the other macro stuff that we have going on. Steve, I'm sure you'll have something to say about that. So if you're ready, we can
Sure.
go ahead and kick it over to you and
Yeah, the
take a
only
look
thing I
at
have to
the.
say about that is that that happened really quickly.
It did. It did. It happened
Like you wake up
amazingly quick.
and then
Hmm.
by the end of the day, it's official. Interesting.
Yeah. Yeah. Interesting stuff. So we'll see how that little soap opera plays out. In the
All right, let me see
meantime,
if I can
let me
change.
kick it over to you real quick here. Take a look at those
All right.
tracking ETFs.
Happy Monday, everybody. Welcome to my desktop. I'll just talk about what I saw in the market last couple of days, last week. This is my first day back. I actually missed this day and this day. I was in southern Utah on vacation, just oblivious, but it actually worked out well. I'll get to that. So the market had a rough Thursday and Friday and a good size volume to it last week as well. And then I'm going to go to the intraday here, an attempt to kind of scare with the gap down even more. And this 420 level, for some reason we laugh about it, but this 420 level, especially on Elon Musk day here, he loves 422. Interesting how that all correlated. Very solid level. The buyers defended the hell out of the 420 level. So there was the first attempt, and then you saw the second attempt, which had no follow through. And right here was an interesting moment in time. I think there's a few people in here, Dave and some others, that heard me talking about being short the NASDAQ and the Qs. And I was doing so by way of the SQQ. And I noticed that, back here, and we couldn't get through the 200-day moving average. So I put on a kind of a nice net short position in the NASDAQ Qs back there using the proxy of the SQQ. So I'll bring those up. Yeah, so today I took profits, and I took profits exactly like when I talk about. I'm going to go back and use the Qs as the baseline, because as I talked about, the S&Ps went to lows. They tried to break up again, and then once it became evident that these last 4 days here, or 3 days, were running out of steam, we got kind of an oversold condition. We can't last in oversold conditions for too long. There's too much separation here from the breakdown where these moving averages are now rolling over and saying, hey, we're time to catch up. So I was very happy with that exit today, and I used that that exit strategy that I talked often about. It's actually more visible here in the S&P. So the entire market had a double test this morning, broke back above, and the minute we got above the declining 10 SMA, that told us that 2.5 days. I mean, I haven't seen this in a while. Look at that. That is just like fun liquidation. That was like a drubbing. Once this candle broke, 2 days of just solid selling, and then that's when I decided to kind of cover my short in the market. Now I'm literally waiting, kind of licking my chops for what I call the armpit. I'm waiting for the price to bounce back up here into these declining moving averages, and I might just put another one of those on, just around those types of areas. Probably maybe the SQQ again, or I don't know. The inverse of the SPY is the SDS. Looking at it as a bullish position, maybe the SDS wants to consolidate here, and maybe I'll be laying here and wait and try that again. But I'm in the camp. What I've been saying, I think there's been tremendous technical damage that's been done to our markets. The Q cannot get back above the 200-day moving average. The SPY has lost its 50-day moving average and its 200 once again. I mean, this was a big rejection wick right here. I was on the road driving this day. Market tried to peak above the 200-day, and the sellers came in and just stomped on it. So this market is now guilty until proven innocent. These moving averages are going to roll over. We're just getting kind of an oversold relief bounce here. I don't really trust it. And I think the IWM Russell 2000 actually made an intraday new low. No, it was close to it. If it had closed down there, it had. But all of our main indexes are under tremendous pressure. There's no reason to try and come in here and be a dip buyer. This today was just a relief valve of 2.25 days of full-on selling. One last thing I'll say is this is another moving average I use a lot. The 15-minute chart shows me a rolling 5-day moving average. So it's literally 130 candles SMA, and it gives me a 5-day moving average. And I'm going to watch this closely. I think if we get some follow through tomorrow, if we come up into this 5-day moving average, I might start looking to nibble into some SQQQ again and reload. That's kind of where I'm coming from. So not really much bullish to talk about. I can't find any sectors in there either. There's just no real flight to quality or flight to something good other than the treasuries yields. People are selling treasuries and trying to get yield. IYR was a past trade of the week. It broke out and then came right back. So, a lot of bottoming tails today, but I don't know how short-lived or how long-lived they're going to be. Twitter, as Jamie mentioned, not much really to see from the chart other than it is showing good strength on the news, gapped up and confirmation today, but the buyout price is around $54. So I mean, how much more really do you have upside on this thing once the arbitrageurs start popping in there and making sure the prices don't get out of whack? So that's
Wasn't
what
it
I saw today.
50? Was it 54.20 to be
Yeah,
exact?
yeah, 54.20. He likes that 420 number.
There's that
That's
number again.
what's so funny about the SPY defending the 420 level today. Interesting.
Funny how
So it's
things
a few
work out
days
like
after
that.
420 nonetheless.
I know.
Synchronicity. So, I mean, I'll just before I hand it back, we'll just mark this up. This was an oversold level, and this level was kind of defended. So it's not going to cut through it like butter. They're going to bounce and probably regroup, and we'll see if this orange line gets challenged again.
Very
That's it.
good and well played, sir. Thank you, Steve. All right, let me just grab it back here and give me 1 second, ladies and gents.
Yes, and that's also why the trade of the week was cash. There was nothing pretty going into this weekend.
Okay, sorry about that technical hang up there. Okay, so everybody's got eyes back on my screen now, so let's get going here. All right, so yeah, a little bit of a technical mess there, which Steve went over. How about my CC readings this morning on the large caps? Well, in a market like this, I didn't really expect much help. Here's what we got after the first 15 minutes, which was basically a slight downside bias. So not a whole lot of help today from that, but not surprising knowing where we are in the overall market. Holly recap. A little nervous about how Holly would have performed today in this type of environment, but not so bad. 4 signals. The 3 things that we typically like to go over here are pretty slim here. Out of the 3 things that we typically look for, only 1 resulted in a good add-on opportunity. There were no good trade arounds because, as we all know, or some of you may not know, a trade around is usually reserved for when the AI gets stopped out of a position. We didn't have any of those today, so no trade arounds to be looked at. Conservative versus moderate spread as well. If we come over here and take a peek at the conservative column right here and the moderate profit column, a lot of the times, but not today, there is a little bit of spread here. Now, technically, there's a little bit of spread on the PAGP, but since it's less than $1, we're just going to call it none. But you can see from the other 3 trades here, not a whole lot of, or not any spread between conservative and moderate profit. Typically, when that does occur, we can key off of certain aspects of the chart and try to take advantage of that as it's unfolding. But none of that to be had today. So in essence, just one good add-on opportunity from the big winner. This one really made her day today, SEMO. So let's take a look at that one. Come on, there's the trash can, there we go. All right, let me get this out of the way here and we'll take a look at this SEMO, which was really a nice looking trade. All right, so here we are looking at the 15-minute intraday. We can see 1, 2, 3, 4, about an hour into the session, not quite an hour, about 47 minutes or so. We get the nice buy signal from Holly, 83.34, comes on up. You can see me, I bailed a little too early. There was my buy in Brokerage Plus, and there was my sell. But notice what happens when we took this nice little pullback right here, right down to Steve's line, which is the 10-period SMA, and it pretty much catapulted it back up, acted as a little backstop there. So once we came up here, notice we're breaking the high of the regular session. Nice little range break right here. Also kind of coinciding with this little wick barely above, and the pre-market got a little crazy in the first 45 minutes of the pre-market. But notice this break area right here, not only does it coincide with the opening range in the regular session, but also coinciding with that pre-market high back there. This would have been a great time to add to that position and kind of toe that entry line for about an hour and a half there before taking that nice little pop up. Of course, you didn't have too long from the top there to make a decision, but once we start to see these red candles form after something like that, well then a lot of the times you can't go wrong taking a little bit off, at least half maybe, and setting a reasonable stop loss for the remainder. So all in all, nice little trade in CMO. The rest of the trades today were just pretty much non-event. A couple of small losers and a small winner in PAGP. So in this market condition, can't be too disappointed with the AI's performance, only kicking out 4 signals and profitable in every risk mode that you see right here. And once again, the numbers that you're seeing right here are based around 100 shares per trade that you can see right here. So thank you, Holly. We'll see what you do tomorrow. And by the way, let's see, what did CMO finish on the day? I don't think it has enough to be included on tomorrow's end of day list. Let's see here, 18.55%, but that is not from the open. Because we did, well, actually, let me just scroll through this list real quick. It's got my curiosity up. There it is, there's CMO right there. Only showing 6.3% up from the close. So yeah, assuming we sort for the close like that, won't make the list, but you know what? I'm probably going to keep my eye on CMO anyway, just due to the action that it had today. And check out the relative volume, not too bad, 7.16. Not quite a low floater, but not the biggest float either. So definitely going to keep my eyes on that one tomorrow as well. All right, moving right along. Let's take a little bit of time here before we get on to the intraday stuff. And I've got some nice little optimized buy and sell windows for you guys to take a look at, which were configured around my turbo brakes up and down, because what I've been covering a lot here lately, and we're going to cover it again today, were the previous day's rippers and keeping eyes on those stocks in the form of a custom list and a couple of custom windows, simply because when a stock has a big day, whether it's the first day or the second day, odds are the following day, it's not just going to go to sleep. So there's going to be some good opportunity there, assuming the proper setup occurs. So a couple of good winners, or 3 good long winners out of that list that was compiled from Friday's rippers. But one thing I'll share with you guys that I was thinking about during the session, I kind of thought, well, that short ticker is going to come alive. There's going to be a ton more short plays than there were longs. Well, turns out just the opposite was true. And then we, saw the market and a little gasp up bounce that it had. So things don't always turn out like you think, but in the end, it's all about the pattern. So what we're going to do here first is kind of look at the price alerts on the, not price alerts, but the strength alerts and how they held up today, because it was pretty interesting with all the strength alerts. Let me get my strength window over here. All right, so these are the fresh strength alerts, and we can see they all finished, not all of them, but 3 out of 5 finished in the green in the position and range today, but that was not the case early on. But I'm just going to start pulling these up here, and let's focus on the daily and WEC here. Notice where this one found some bouncy right there at the 20 period moving average. It's in red right there. All right, so keeping in mind when we do have days like this and you're looking at things like the strength alerts, notice a wick right down to the 20 period on WEC. UNM, looky there, look what we have going on there. right down to the 20 period and that nice long tail on the wick there. HST, I think this was the, yeah, that was a strong one. We'll come back to that one. Once again, 20 period, AEE. Now we got the little sloping relative strength, but that's always a good sign, all right? IRT, not quite down to that 20, but notice the correlation there between the 20 and the 10, all right? But all of these, with the exception of HST, wicked perfectly down through the 20 period. So file that away in that brain. Next time we have a soft day and you're looking at the strength alerts, think about that. Remember the 20 period, because that would have been a great place to make some entries. Kind of reminds me of Steve's entry on CF today. Not the 20, but the same type of deal. And this one was not on the strength alert. This one was on the trader's eye, but the same song, same dance.
I did fail to mention that. I meant to mention that. Thank you.
Yeah, so I'm gonna guesstimate here, Steve, somewhere right in this area here.
Pretty much close to where it closed. I tell people all the time, I'll make decisions on getting out of bad trades and I'll make decisions on getting in trades I want to take a position in. And so right around the close.
Yeah, okay. But once again,
Once that candle was established in my mind, then I'm going to lean on that pattern there for the day.
yep, absolutely. Okay, so which one of these was not like the others? Going back to the strength alerts, HST just really didn't want any part of a sell-off today. Let's see here. I think we are, yeah, here's the weekly on that one. So not quite ATH, but definitely an interesting level that it's butting up to here. If we look back in this little area here, but notice the relative strength on this one. I mean, that thing is still buried at the top and very indicative of the way that it acted today. Didn't want a piece of the 10 or the 20. Said, nope, gonna stay up here. But, as far as a price alert goes, anything above 21.18, 21.20-ish would probably be wise to keep your eyes on there and see how it reacts once it gets up there. So just wanted to point out the interesting correlations in the strength alerts and that 20 period. We'll see if that continues to be the case when we do have these softer type days. Okay, so once again, for the swing traders out there, maybe you like to do a little bit of both. I mean, swing trading has been a bit more difficult in this market environment, which is why I've been focusing mainly on intraday stuff. And something that's really been producing some good plays on an intraday basis is my previous day's rippers. And a lot of you out there are familiar with the process already, but just in case you're not, I'll do a quick walkthrough of it. When I talk about previous day's rippers, I'm just talking about, hey, things that had big run-ups from the open, not talking about gaps, okay? Not talking about change from prior close. I'm just talking about things that got up and boogied either to the upside or the downside from the open. So I've got these two top lists right here, and this is where I compose my end of day list. So these are all the symbols that are going to be on, and what I'll typically do is stretch them up a little bit here, get about 36, 37 symbols from each window. Things over here up the most are DBX. Those of you who are in Barry's room, I know Barry, was it RDBX today? I can't remember, Steve. I think it was one of those. Let's see here. Let me back up. No, NKTX, which was not on the list today, I don't think. Oh, there it is. Okay. So it wasn't on Friday's list, but it will be on the list for tomorrow because of what it did today. No big action on Friday, but a massive gap up and a huge green candle there. So that one's definitely going to be on the list to watch tomorrow because you can bet your bottom dollar it ain't just going to sit there tomorrow. But of course, the pattern has to materialize, but it's definitely going to be on the list. So this is what the list looks like at the close today. So what I'll do is I'll just copy all of these symbols and I will post them into my custom list, which is aptly titled previous day's rippers. And you can see the number there. I had 72 stocks in there watching today. And the whole point of this was to try to reduce the universe of stocks that I was trying to keep an eye on. And 72, while that's not a small number, it's a lot smaller of a number than, say, watching my turbo brakes up and down, which I still like a lot, but there's always a lot of symbols coming through here. So the reasoning was, okay, they were alive today, they had big ranges and big moves and big volume. Probably the same thing is going to continue tomorrow, or maybe for a number of days. All right, so as I was speaking about earlier, I thought that there would be a lot more shorts than longs, but that was not the case. But we did have 3 high quality long plays come through my previous day's rippers. And of course, I'm referring to these windows right here, which are pointed to the custom list that I created. And by the way, I'm going to be dropping all of the links for these windows into the chat area before we're done here. So just keep in mind, these are very simple alert windows with a new low, new pre-market low, and for the long side, new high, new pre-market high. So you can't start watching these before the open to try to pinpoint those nicer pre-market ranges. But you can see here, once you compose the list, you have to point your window to that specific list. So out of this guy today, the PDR high, let's take a look at the candidates that were produced. We had 3 of them. Of course, we had a lot more symbols coming through here, but the setup was only right on these 3. We'll start with this one right here, DRIP, which this one happens to be an ETF, but once again, doesn't really matter if the pattern is intact. So also keep in mind, these are plays that if you're watching on the open, if you're a trader that likes to get in on the open, then these can be very conducive because our downside is determined, right? And what do I mean by that? Well, if we look at the pre-market range, which I've bracketed off here. Now, keep in mind, I included the bodies right here instead of all the way down here on this candle. Now, this is a personal preference. If you're a wick person, or, you know, when I look at this, that gives me confidence in going, well, if I get long right here and it breaks this level, I'm comfortable being stopped out. Of course, we could reduce share size and use, you know, the lower extreme there, but that's really a personal preference. You know, this is more what I consider an anomalous bar. This is more the true range right here. So that's why I've marked off these levels right here. And the methodology is quite simple, right? I see this alert coming out at this time, right on the open, and I'm thinking to myself, well, or, you know, everybody's thinking, well, things can turn against me very quickly on the open, but as long as you have a game plan and you can see the level on your chart and have time to put that stop loss in, well, that takes a lot of the risk out of trading in the first 5 minutes, okay? And that's really the allure of using the pre-market range, or one side of the equation, for risk management. And, you know, the other is being able to get into something that might move a whole lot a bit earlier than waiting 30, 45 minutes for that pattern to materialize. So we got a great little signal right here on this first wick up through the 15-minute candle there, or that pre-market range on the 15-minute candle. A little bit of elbows being thrown over the next hour, right about here, right? But using this level right here, kind of came close right there, but no cigar. And then after it firmed up a little bit more, we did get that higher move up. So original signal coming right about 25.82, and this guy topping out at 27.26 for a rather decent reward versus risk. Don't know if we could put that guy in there about 2 times, but it's going to be close, and that's typically what we like to see. A little bit fatter of a reward area than what we're willing to risk on the trade there. So a decent trade coming from an ETF on DRIP. And of course, you know, we didn't take that money. We had a little bit of time to make a decision, but that was a pretty severe reversal there on that candle after the topping tail there. But once you see a candle like that with that wick and that little bitty body, that should also be a good indicator. Might not be a bad place to take yield profits right about there. All right, so this is a repeat offender right here because this guy's been on the list before last week, Swivel. Why is that? Because not only have we had today, but the 2 previous days. So Thursday, it made the list for Friday, and then Friday, it made the list again for today, and did not disappoint. So once again, I've marked off that pre-market range right there. And then shortly after the open, we get this nice buy signal as that pre-market range is breached. Stop loss is clearly visible, right below here. And we get a nice lift, right? Original signal coming around 650, we could call it that. And this little guy topped out around 950. Once again, market conditions are crazy. Wick up here, wick here, and then that final big wick up there. So if you weren't lucky enough to get out any up here, clearly an indicator to take those profits. But that was a pretty massive move from a percentage basis from 650 up to almost 950 there. But pretty much, compared to the risk level here, a nice big reward level. We could probably put that guy in there 3, almost 4 times. So Swivel did not disappoint. And lastly here, a beautiful setup on Sky H, and look how similar that looks. Swivel, Sky H. Very nice and tight pre-market range here. Makes our choice easy. Once we see it hitting a high right on the open, all right, can easily take that trade, use these levels as my risk factor. So once again, 818, 820, and this guy topping out really close, about 11, what was the high of that candle there? Almost 1120, 1118 to be exact. So the signal coming at 8 and change, topping out at 11 and change. Once again, a very nice percentage move on a day that looked pretty bleak as far as upside action goes. So 3 decent plays, Sky H, Swivel, and Drip, all being produced from this methodology here of previous days rippers. Okie dokie. Well, we do have one from the downside. Like I said, I was surprised I didn't see more of these, but just kind of slim pickings to the downside. So let's take a look at HPK. Not too bad on the pre-market range right here. Nice and tight. Opening tick or opening 15-minute candle here. This short signal coming around 34 and 61 cents, bottoming out 29 and 10. So once again, higher price stock, but a decent percentage of profit potential here. Could easily fit that risk area at least 2.5, almost 3 times into that reward area. And of course, if you didn't take the money, it quickly reversed. That seemed to be the case on the longs and the short as well. But watching this ticker all session and just the ranges weren't conducive. HBK was the only one I was able to target that had that decent pre-market range there. Hi, Jonathan. I will be dropping all the links for the windows that I'm talking about into the chat area before we're done, so no sweat there. And that's pretty much it for the PDRs today. So once again, methodology is quite simple. We're going to collect all these symbols from today. We're going to repopulate our list. And I've also included these windows as well. So just let me repeat, you'll have to create that list, populate the list with these symbols, or however many that you're comfortable with. I prefer 36, 37 from each side, but you might be, hey, I want to do 50, or maybe I'll just do the top 10 and try to get used to the process. So whatever your comfort level is there, use that amount of symbols. Okay, now I would be remiss if I didn't point out the fact that Sky H and Swivel were showing up a lot in my stock race, which is well, my favorite stock race, which is the Hugging the 10, which I've also included in the links. This little guy right here. Lots and lots of stocks coming through there today, but also Swivel and Sky H started showing up as soon as we got in, into that 10 period there. Let's just take a look at Sky H one more time. Yep, as soon as we broke here, just started seeing it all over the stock races as well. So a lot of the times that can give you an idea. If you have not made an entry, well, it's showing up, the pattern is good, and it's also coming through the stock races. Or if you're already in the position and you see that stock showing up a lot in the races, and I use 1 minute races so I get that report as quickly as possible, well, then that can give you the conviction to, to hang in there a little bit longer, assuming that the chart is conducive. Okay, so the whole theme behind the previous day's rippers is keying off of the pre-market levels and the pre-market ranges, and are they conducive? So I took it one step further. These turbo breaks up and down, if we were to cycle through those, you're going to find a lot like we just saw here that weren't necessarily on these lists. But there's so many symbols coming through here, it's really hard to keep up with every one of them. So I was thinking to myself, well, how about we just pull out the old back tester and start doing some optimization and only focus on the filter pre-market range. Maybe we find something, maybe we don't. But after it's all said and done, I think I found something pretty interesting. So that's what I'm about to share with you guys here. So let me get these windows pulled over here. How we doing on time? All right, just enough. A little drink of water here. Let me check out your question here. AK, do you do the market close to generate the list or include after hours? Nope, I just use the close, okay? And even if you have forgotten, let's say you forget to do it today, well, later on tonight, you could always come down here and go to the historical date and just use the time of 2:55 or whatever your time zone is. That's 5 minutes before the close for me. And boom, you'll be able to retrieve those symbols using the historical mode. So typically I do it about 5-10 minutes before the close, but if you do forget, you can just go point to historical mode and do it that way. All right, perfect. Okay, so first off, let's just get the back test up here, and hopefully the back tester is cooperative. It was running nice and smooth earlier. All right, there we go on that one. And here we go on this one. Okay, so this is the long version right here. Make sure these numbers look good here, nothing's changed. Okay, and all the numbers that you're seeing right here, all just based around throwing $1,000, $1,000 into each trade, just for easy math here. And not too bad on the equity curve here. Check out the number of losing days in a row is only sitting at 2, number of winning days in a row 6, and only throwing $1,000 into each and every trade. Your biggest winning day was $424. There's that 420 showing up again, Steve. And your biggest losing day was only $87, and that's to the long side. Now on the short side, a little bit more pain on the losing streak. 4 losing days in a row, 5 winning days in a row. Coincidentally, biggest winning day, $470, not $420, and biggest losing day, $142. Not too bad when you know that your biggest losing day is going to be $142. Of course, that's no guarantee, but that's what the past 40 days of data is showing us. So, of course, I'm showing you guys the finished result here. But if you've got one to the long side and one to the short side, it's always good. I wish we had a button where we could make these translucent so that I could lay these on top of one another. But typically, it's always good to have a pair like this if you can come up with it, because when one is having bad days, the other one is pulling the weight on the green side and vice versa. But either one of these on their own look pretty darn good over a 40-day period here. And what I also like about these is the simplicity. Notice that my number's off there. Let me do something here just to get that equity dialed in, looking accurate. Okay, now notice also too, I've built in 5 cents of slippage on the entry and 5 cents of slippage on the exits to give a more realistic output here. So that's a total of 10 cents of slippage for each and every signal that was generated. So over a 40-day period, we've got, let's see here, 130 coming from the short side and 78 coming from there. So about 208 trades over a 40-day period there. So certainly not too many trades here. Now, let's get into the nitty-gritty and the nuts and bolts here, and we'll come back to these guys. So notice it's not a lengthy filter set. Now, of course, the new high is the alert, and this is our filter set. So notice the only thing that I've added here basically is the position in pre-market range. And then on the long side, all the money pointed to the price. So these are the only two optimizations that I did for the long side. Stocks between 4 and 5.99 and position in the pre-market range, 12 and 13.99. Minimum of 12, max of 13.99%. So let me just take the original version here, and we're just going to kind of walk through that optimization on the fly here. And let me confirm I'm using the right hold time. Yeah, because I originally did this one for 60 minutes. Turns out it's better at a 90-minute hold time. But hopefully with what I show you here, maybe it'll spark a little creativity up there, get you guys back into the back tester if you haven't been using it lately. So make sure this is the right one. Okay, so that's the modified version. We'll just kick these guys down here for a minute. But just want to go to show you, when you get an idea about one filter in your head, the optimization process is not lengthy at all. Okay, so this is just a basic version of my turbo brakes up. Just a max over here, little max volume, and 3 on the relative volume scale. So what I did is I just originally started out keeping in mind that this is going to be transpiring on the open. So just back testing the first 10 minutes of the open. I started off with a 60-minute hold time. Didn't really use any risk management because we just want to see what's out there, and I did 40 days, and then we hit the buy button. And, you know, when you first run a back test and you get results like this, you're like, not exactly the start that I wanted to see. When I look over here, I see this, but then again, I'm like, okay, remember, you came here for one thing and one thing only, to pop into here, to go to other filters, and to find position in pre-market range. So we click on this filter. It's got some crazy interval. Start shrinking that down a little bit. And at first, don't see anything at all. All right, well, we got to keep taking it down. Okay, if we're looking at increments of 5%, hey, I'm starting to notice something here, right? Maybe this is where the fun's at, right? Maybe we should go a little bit smaller. It's like a microscope when we're putting on another lens to see, you know, higher and higher magnification. So I can't remember off the top of my head, but I think this is where I started right here. I just said, you know what? This looks like the only area of anything good when we're looking at this filter, right? Just this little pocket of goodness right here. So I tell you what, let's go ahead and set it to a minimum of 12 and a maximum of 17.99. And make sure those changes stuck. Okay, interesting. Notice that this is the window that I duplicated and made the changes, but I think it's making the changes to my original window. Let's see if my assumption is correct. And sure enough, that's what it's doing, which I don't know why that's the case. I would want it to do that to my duplicate, but as long as you know which one it's modifying, then that's good enough. So then we're gonna rerun it here. Okay, I think we got a little bit of improvement here, but still certainly nothing to write home about. So what I did next is I came over here, like, well, maybe there is something to price, right? Well, sorting in increments of $5 seems like if there's gonna be any hope whatsoever, it's gotta be up here. Let's go a little bit smaller. Okay, so then my eyes go, well, okay, 0 to 299, that's a bunch of garbage. But look here, we might have some hope here, right? What if I, change it? Maybe, maybe the lower price stocks have the propensity, more of a propensity to get up and go. And certainly through experience, we've noticed this. The two that we just looked at earlier, not the highest price stocks in the world, but they sure did get up and go. Big difference between, not a big difference between profit factors here. So let's just do this. Let's go ahead and set our minimum, 2, 3. And we'll just keep the maximum at $5.99. I think that's where I went. I can't remember if I went to $8.99 initially. Just trying to give you guys an idea of the process here. And then we'll run it one more time. Okay, so getting better. Now this looks a lot better. And all I did is go back in one more time and check out position and pre-market range, because sometimes things change. All right, notice it automatically is showing me smaller increment levels here. So we can just target on where the highest profit factors are. So let's just go ahead and set the min to here, which will be 12, and tighten up that max as well to $13.99. And we give it one more pull. Okay, and I can't remember if I duplicated it. Let's see. I probably messed something up here. But now you see a much different story unfold. And you have a reasonable number of trades up here, only 112 coming through. And then one last little tweak here. I was using 60 minutes, went ahead and went up and down, but initially in the end, came up with a better hold time of 90. So now we can see spread 32.17, 34.15. So a little bit bigger of a spread, not quite so good on the success rate, but nonetheless, let's see how close did I come. Okay, so here's the one that I will dispense to you guys, my original one, 55%. I must have got one of those ranges wrong. Let's just take a peek and see what it was. It's funny because both Andy and myself, when we try to rewalk the steps live, we always mess something up. So 12 and 13.99 on that guy. And what did I end up with here? That's the original. $12 and $13.99. I think what I did, $4 and $5.99 on the price is it. Yep, and 3 and 5.99. 4 and 5.99. Okay, I got close. I got close, ladies and gents. So, you know, having a set like this to monitor, not necessarily a bad thing. Now, one more thing I'd like to point out is on the short side, I started going back and looking at the pre-market ranges, and turns out they're looking pretty good. So let me get this up one more time. If I can make my fingers operate properly. Just to kind of show you guys, a lot of the times on the short side and sometimes on the long side, that pre-market range is going to look conducive pretty much to the way that we're scanning for them on a manual basis using the PDR method. Come on back, tester, you can do it. Oh well, I've still got this one up. So we can just pop over to the calendar. We'll go back to the 7th here and just kind of take a look at the trades that were generated just to see how those pre-market ranges looked on the 21st. So let's see here. XPEV was a decent winner on that day. So if we just kind of backtrack here. Okay, so XPEV on the 21st, this is the 21st right here. And notice the signal that it generated right on the open. Notice that pre-market range, looking just like what I like to showcase on the previous day's rippers. Okay, I don't think they're all going to be like that, but hey, that fits the bill right there. Not only is it good from a statistical standpoint, but if you have a high probability window issuing a signal like this, and then you've got that very conducive pre-market range, even better. Let's take a look at the snap trade on that day. And of course, I got to scroll back a little bit. Okay. And there we have it. Check out that pre-market range, flat as a board, that opening signal right there, snap. Okay. So this little guy's producing not only some very good statistics, but the pattern seems to be there as well. All right, I know we're running out of time here, so let me grab my link list and go ahead and drop it in there for you guys. All right, this should be all of them at once.
Well, that's efficient.
Yeah, there we go. Okay. 1, 2, 3, 4, 5, 6, and 7. Yep, they are all there. So go ahead and copy those guys down, load them up, start to give them a watch, and we will revisit upon the next office hours. So let's see how we doing on questions there. Yeah, Jonathan, you know, back testing is an adventure each and every time. And you know, the ones that I showed today are a perfect example of, hey, the back test looks horrendous on the initial scan, but if you have that one filter that you're basing your idea around, and you go down there and you dig deep enough, all of a sudden all that red can turn into some green, and hopefully translate into some other type of green in your trading account before too long. So thanks everybody for popping in. If we don't have any other questions right now, I guess it's time for Scott to walk us on out and let everybody know how they can save a little bit of cash on a new or an existing sub, maybe an upgrade.
Yeah, thanks, Jamie. A couple items just to hit up on the way out. Make sure you got the favorite strategies indicator ebook. It's written by our director of software technology, software development, Dave Made. It's got a lot of great ideas on how to leverage the strategy indicators in the software. Just go to tradeIdeas.com/strategy to grab that. If you're an interactive brokerage client, you can connect us directly using Brokerage Plus. to your trade ideas installation and trade with a single click, or use automation to trade through your interactive brokerage account. Find out more about becoming an interactive brokerage customer at TradeIdeas.com/IBKR. You got a new way to visualize the stock market. Go to trade-ideas.com/stockrace to learn all about the stock racing visualization. It lets you use any top list and some other parameters to see what is winning in the market over different time frames. There's a bunch of different ways to use it. You've probably seen some demonstrations, but do take a closer look. If you have E-Trade, you can trade with zero commission. It's a nice kind of friction-free way to use trade ideas. We integrate directly with E-Trade, just like with interactive brokerage, over the Brokerage Plus module, so you can connect your account directly to E-Trade and enjoy some zero commission trading directly from within Trade Ideas through your E-Trade account. If you decide you want to become a subscriber or upgrade, go to our page, TradeIdeas.com/pricing, and use Spring is here to either get a new subscription or upgrade. Save you 15% off your first installation of either. And if you have any questions, go ahead and follow Jamie on Twitter at QuantBot. You can find Steve at TISTG. We're on our YouTube channel is Trade Ideas, and our Facebook handle is Trade Ideas Pro. And if you have any questions, email us info@TradeIdeas.com. So thank you for tuning in. We'll get that recording up pretty soon. And have a nice one, Jamie and Steve.
Hey, Scott, thank you very much. Everybody, thank you for attending. Thank you for your input, Steve. Always golden. We'll see you guys next time.
See you Wednesday.